Introduction to inheritance tax. Inheritance tax, or IHT, is a tax on what a person gives away. It usually arises when somebody dies, but that's not necessarily the case. Death is simply the final gift. If you're a long-term UK resident, you are subject to UK inheritance tax on your worldwide assets. Each individual has a tax-free amount known as the nil-rate band of £325,000, and this can be transferred between spouses on death. Most gifts made during an individual's lifetime are potentially exempt transfers. They will be exempt from inheritance tax if the person making the gift lives for 7 years from the date of the gift. This is why inheritance tax planning generally involves giving away assets at a time when you expect to live for more than 7 years. If you make a gift and die within 7 years of, but more than 3 years after making the gift, the tax charge on the gift will be subject to taper relief and reduce the tax that's payable. Gifts into trusts are chargeable lifetime transfers, and any taxable value after deducting the available nil-rate band are taxable at 20%. There are various reliefs and exemptions from inheritance tax. For example, the resident's nil-rate band, which provides an additional tax-free amount to be offset against the value of your main house. This can also be transferred between spouses, but can be subject to a restriction depending on the value of your estate. Business and agricultural property relief that can give 100% tax relief on £2.5 million of qualifying assets and 50% relief on any excess value. There's an exemption for amounts left to charity, and gifts out of surplus income not affecting your standard of living are also exempt. Before taking any steps to manage your inheritance tax exposure, we would recommend you fully understand your potential tax liability and consider what income and capital you will need to maintain your lifestyle. This will help inform any decisions that you make. We would also recommend you review the terms of your will to ensure this reflects your current wishes and is drafted to be tax efficient.